So after trying our universal strategy that was generated by ChatGPT, I've came to conclusion that I need to basically create my own strategy based on my view of how the trading should go, because this strategy still doesn't work well for the bearish market, while it shows some good performance for the bullish market. So I decided to create separate strategy per market type. And today we're gonna be testing the strategy I've created for bullish market. It is long pullback strategy. So let's dive into it. So this is the code I created. I've used a bit of an AI to help me to create this code, but the overall algorithm of the strategy was something I've been analyzing myself. So this algorithm basically observes the EMA 200 and searches for the pullback spots when the chart slightly goes down. Then we can enter and figure out the best exit number to exit with the profit. At the moment, I've implemented the entry indicators, so entry trend. Let's analyze it. So I took EMA 200 and I make sure that EMA 200 is consistently rising for the last 5 candles. So we have strong bullish pattern of EMA 200. And then I'm using EMA 20, EMA 50 for the analysis of the pullback entry. And let's explore it right now. I want to find out the horizontal support. So basically in the trading view charts, it's pretty much straightforward. You can just analyze 2 dips. Here I find out the way to analyze the horizontal support by finding the pivot prominence, so basically analyzing the 2 significant latest dips down where that will indicate the support level. So, and to better analyze the support, I'm using ATR indicator. ATR actually help us to find out the volatility of the current coin. Based on that, we can find out the more proper support lines rather than relying on small movements in the price. So this code actually observes the last 200 candlesticks and analyzes the support line. And what we want to do, we want to find where support line intersects with either EMA 20, EMA 550. And by intersection, will be actually doesn't mean intersection specifically, but if they within 0.3% of zones, they are difference. They are more or less like in it almost intersect. So we give it some room that it will be our pullback entry area. So we're using these kind of complicated, I would say, calculation that I have not tested yet, but I wanted to really the support lines accurately. So in the chart, it's easy to do, but in the code, it requires some tinkering. And I've done all tinkering, all these verifications, and it basically helps us to show the support line and the support line. I'm using Fibonacci retracement. So with Fibonacci, we're retrieving 3 lines that more likely to be support if you don't have clear support. Yes, but still searching for the intersection between line and the EMA 20 or 50 is the same 0.3% proximity, and then this near function help us to understand if it's near the either of this line. So this is how we kind of code that just popular indicators, which is like when you're doing in the chart, it is straightforward. You just put the dots and that's it. And the popular entry trend is more simple because we've carried all complexity here. So it basically checks if the price is lower than EMA 200 because we want it. If it becomes higher EMA 200, it's a strong signal of reversal market. So it's strong bearish signal. We want to make sure we're on the bullish signal, and we want to make sure that the EMA is growing up. So it's not flat, it's not decreasing, it's only growing up for last 5 candlesticks. It is the bearish signal because we're only going long here. Yeah, and then we found if the EMA 20 is close to the support line, and then if we made 20 close to Fibonacci line, and these are our entry positions, so we entry in either of these four. These are the first analysis I'm doing when figuring out entering position. The second one will be the candlestick analysis itself, like the volume in candlestick analysis, to see how candlesticks changing when they're getting closer to this position, and it might better indicate if it is right time to entry or not. I have not implemented it yet just because I want to keep things simpler, even they still a bit complicated. So I'll relying only on these entry positions with lane dissection and Fibonacci. The trend, I have not defined any exit trend yet. Sometimes just using the percentage of profit I want to take, or in the charts I'm using the resistance line. So if we have a resistance line where the weakest support line and weakest resistance line, we can set our exit as a resistance line. So I'm doing trailing stop here. So basically my stop loss is 2%, and then I'm trailing stop until I'm getting some profit. Yeah, and I disable static ROI because I'm only relying on trailing stops. This is the first version of this strategy. And what I want to do, I want to backtest it right now to see how reliable is it. So let's do it right now. So I'll go ahead and download the data for the spot for the last, it's 180 days. Let's do for the last year, if it will allow me. Okay, great. I downloaded the data. Let's data and verify. Yeah, so we have the lots of spot pairs here. I'm only focusing in Bitcoin and Ethereum at the moment. Yes, using spot because this is the long strategy, so I don't want overcomplicated with futures at the moment. I just want to test its profitability. So we have a good 1 year of data when the market was different. The market was sometimes bearish, sometimes bullish, sometimes uncertain. So that's the kind of good chunk of data and help us to validate our strategy in different markets. Yes, and I want to check out my trading pairs. So what I'm gonna do at the beginning, I will only do the BTC ATH backtesting. So yeah, let me just get back to my comment. All right, so I'll be executing my command for my Simplified with my new long pullback strategy, and for the pairs with Ethereum and I also specified the time range explicitly to make sure that my strategy is tested among all the year periods, and I'm running it right now. So what I can see that the strategy is unprofitable. We lost some money. It was like minus 3% year, which is kind of like unprofitable and lots of losers. So only like 51.6 winning percent. So it goes wrong here. And let's check what was the best worst pair. So the best pair was used Binance, and ETH was slightly worse. So there was a when we generated $10 and lost $5. Yeah, so the strategy is not good. So the next step here would be to create more smart entry position. So we can either try to make lower stop loss, let's say 1%, and see how it works, but it will still not work because we are not losing much on stop loss, we're rather having inaccurate entries. So we have entries during bearish markets, and I think what can do two additional conditions. The first one, we need to make sure that remain 20 and 50 pointing down, or at least 20 pointing down. It means the pullback. I'm not sure if it'll help, but I would like to have the candlestick analysis to better understand the pullback behavior before entering. And also maybe if I will have the resistance lines for exit strategy, it will help me to better benefit from the price swings during making the profits. So I think before making more in-depth analysis, I will implement the candlestick analysis for entry position. But before making these implementations, I want to do further analysis. And here's what I found, that with our tags, we have 400% profitable tags that generate lots of profit, and we have unprofitable. So we can basically analyze what are those. So we can see here that the Fibonacci actually is unprofitable. We can see that our profit comes only from support lines. So Fibonacci basically something that has lots of losers. And of course, Fibonacci has the higher trading percentage, but the support lines has much better winning ratio, which is 66 and 62%, and which is actually something in most trading patterns is expected. So 60% of accuracy is something that expected. So what we can do, we can just delete the Fibonacci from this computation and try it out with our Fibonacci just with support lines. So let's do it right now. So I'm commenting out the Fibonacci, and I will run backtest again. We're still unprofitable. That's weird. Did I miss something? Something happened differently. So now we have support lines unprofitable with winning percentage of just 54. That's the previous one. Oh no, we had actually 62. What has changed? Let me try to adjust the Freqtrade open. Let's give it a 10. Maybe this will change something. Yes, so we're still unprofitable. And it doesn't make sense to me because with Fibonacci, support lines has 64% of accuracy, and right now they have 54. And I think the max open trades limit was preventing. I got the idea. So basically what was happening, that during Fibonacci enabled, Fibonacci was making some trades that happened before the support lines, and these trades were not really accurate, 50%. So now when we disabled Fibonacci, we allow support lines to take more trades that initially were interrupted by Fibonacci, and it means that support makes more trades and less accurate right now. So it still doesn't solve a problem. So Fibonacci was less accurate. Like with Fibonacci, we had more losers. With support lines, we have fewer losers, but it's still unprofitable. So what I'm thinking is that trailing stop might not be a good exit here as well. So what we can do, we can enable back Fibonacci. And so our stop loss is 2%. So let's say that our minimum ROI will be twice as much as stop loss, which will be 4%, without using trading stop, because trading stop might let us prematurely exit and take fewer profit. So let me adjust this. Yeah, so what I have changed here, I've set up the positive offset of 4%. So only start trailing stop when there is 4% of positive offset. And I've set require at least 4% profit. So it means when the price is up for 4%, our strategy will consider trailing stop further. So if it continues growing for 5-6%, we can still benefit from using trailing stop, but we do not exiting earlier than 4%. So it means that we can potentially lose something because the price may go for 2% and go down, and we lose a good stop loss. But on the other side, there might be room for us to take better profit. So let's test this strategy right now with everything support in Fibonacci, and I'll set up a low open trade. That'll be 10, just long, big enough numbers, so we can have 2 trading pairs, and we can have 1 trading pair. So I don't think we'll have more than 2 trades simultaneously, but let's run and see. All right, now we become profitable, and looks like we starting benefit from it. So the problem is that we're still having winning percent of 36.5, which is really low. So we have most of our trades are bad. We should aim to have 60% of winning. That's good. But the benefit is that when we win big profits, so our profit is neglectable. So we are trading for a certain amount of time and our profit is really neglectable. But let's dive deeper into different indicators and see which one is the most profitable. So we can see that EMA 20 support line was really profitable. And then, yeah, support line's more profitable. But again, it's probably the same scenario. The Fibonacci taking over most of the trades and becoming profitable. So we can see that the Fibonacci EMA 50 actually is the only one that unprofitable. And it make the most of the trades. So I assume, well, let's disable Fibonacci EMA 50 intersection and see how both strategy will behave without it. Yeah, so we tested it and no, we didn't. I think it's even worse because we have 0.83%. The last time around we have 0.73. Yeah, so now it's even worse. Then we can see that again the Fibonacci is still unprofitable. So let's disable Fibonacci 20 as well and see how support lines now will behave without Fibonacci. That's good. Now we got it even more profitable. So support lines are more reliable. We get almost 2% of profit. That's really good. So we can see that the support EMA 50 is unprofitable. And I'm curious. So our winning percent is still 38.1, which is really bad. And this is something we need to fix. So let's try to disable EMA 50 for support and have just one entry indicator, which is EMA 20 with support, and see whether it will change something. Yes, it's better. So EMA 20 performs much better. So we have now 2.5% of profit, which is really good. But still winning percent gets better, but it's not that good. So the takeaways from this strategy would be that we can play more with minimum ROI, increase it. We can use the resistance lines as ROI. I think something wrong happening with Fibonacci. So it's either inaccurate or we're not calculating it good. And the support lines require additional analysis of candlesticks to make them more accurate. So what I'm gonna do next, I'm gonna implement the candlestick analysis and see how it will influence our current profitability of this strategy. Still a 2.55 return on our bullish market is really good, considering that we'll have another strategy for the shorts that might also generate the same amount of profit. It might be good, especially if we include more trading pairs. Basically, let's give it a try. Let's include more trading pairs here. So let's add BNB. Those are dangerous because they might be more volatile, but let's give it a try and see if we can benefit in profit from adding more trading pairs. But still, adjusting our, let's do it right now. Adjusting our entry position by candlestick analysis will be game changer, I think. So it only does for 200 days because I don't have data. Oh wow, that's super huge. We got 12% on last 200 days on mixed market. That's insane, guys. I'm super excited because this strategy is just a first draft that literally has very little accuracy, and it generated us 12.5% of profit in 200 days. That beats S&P market, and this is only long. And what will happen if you find out the same strategy for short? That's exploding my mind. That's raw profit, so I'm really excited about it. That's really good. And we're doing only one support line. You see, we're only doing EMA 200. Let's actually enable another EMA for the support and see how it behaves. But there is a big room of opportunity here to find out how it works. So let me do it like this. 12.5%. I'm in love with that. So the profit has decreased when we introduced the EMA 200. So I think if we introduce Fibonacci, it will go even more worse. So intersection of support line EMA 20 is big kind of profit spot. I think this one will go worse. Now it's unprofitable. So Fibonacci is not really good. What I can do, one more adjustment to play around is let's increase to 6% and make this 6% as well. So we apply minimum profit of 6% and see maybe it will change something. I'm not sure because we're using trailing stop, but let's give it a try. No, it do not. So basically the 4% was the most optimal one. We can also try to decrease. We can do 1% and 2%. No, that's not good. So basically 4% and 2%, this is the best parameters for that, and we got insane profit. I'm super excited. So our next step will be to include the candlestick analysis to increase the winning percentage. And if we'll have a winning percentage of 60%, which is industry standard for most of the trading indicators to have 60%, we will get insane profit from this strategy. So I'm super excited. And let's do the candlestick and let's test it further. Additionally, to prove this strategy further, I decided to do the test on 5 years because the 5-year period can show exactly how the strategy behaves under different market conditions. And throughout 5 years, we have couple all-time highs for the Bitcoin, we have a couple dips. So Bitcoin went all the way down to 3K or something, and then it has risen to 120K. So market was really insanely volatile. And this is a report from 2020 of September to 2025 of September, which is 1,826 days. So I needed to increase the RAM of my Docker container to be able to test it. And here we found that there were no single pair unprofitable, so everything was profitable. We found that one of our indicator made 9K and one loss 5K, so it's a big loss, right? But still we managed to be profitable. If you see the statistics, our total profit for the 5 years was 343%, but the drop down was 30%, and we can see that winning ratio is 45%. So we're still losing a lot on inaccurate entries, but beside that, we can clearly state that the strategy is really profitable. Even if the profit is good, we are beating the stock market with this profit. Of course, it depends if the crypto will go for a couple years of bullish or sort of bearish market, then we'll need to find out a similar strategy for futures to make profit. But if we do the 343.22 times 5, so we have 68% on average per year, which definitely beats the stock market. However, I still think that we can be more efficient, so we should have consistent 100% on bullish market. And it's not about that I'm greedy, I want more, but actually I see that we have pretty much same amount of winning trades as losing trades. And this is when we are losing lots of profit. So I would like to increase it. I want to have at least 60 win, 40 loss. And that way we will be able to better understand and gain more profits. So what I want to do, I want to debug this strategy and find out everything about the winning entries and losing entries and why they're different, and see how different indicators intersect here to find some more hints and better understand how we can tweak our strategy to gain even more winning ratio and thus gain more returns. So after running some further analysis of this comprehensive trading strategy, I have found that it produces approximately 60% of return per year. So I tested it in the last 5 years, which is pretty stable because the last 5 years were really unpredictable. There were bullish moments, there were bearish moments. So I would say this strategy performs really well. But to be more confident in that strategy, I have created the Jupyter Notebook where we can visualize each trade and analyze what stands behind this trade. So what was the concerning case with this strategy is for you to make it profitable, we need to have really large stop loss. And I don't like it because potentially there is a big risk of burning our budget. And I think a reason why we need large stop loss because our strategy is not optimized. So let's go and analyze it right now. So basically this is a notebook. I spent a couple of hours creating it. But what I'm doing here, I'm basically extracting all of my trading data, results, signals, and Binance data, so I can plot the charts and see how the strategy entered and exited with different indicators. So what we can see right now, if I scroll down, there are lots of code that creates everything. I scroll down to the results. So we have result, and I'm printing basically some values and the charts. So for instance, our first trade, what we can see here, that each trade has a support line. This is already support line, and the intersection of the support line, one of the EMAs, was our entry, which is correct. But what I disagree here is the support line. This support line doesn't make any sense to me. So we have 200 candlesticks over here, and according to these 200 candlesticks, this support line just absolutely hallucinogenic. So for me, support line would be somewhere over here where it touches this candle, maybe over here, just lower, right? Or even we have something here. Well, again, these 200 probably not enough in this case to have the proper support line. So we enter it here. The support line doesn't make sense. So when I open the larger chart, it's hard to see. Unfortunately, I can't zoom in because this is the notebook. We can see that we entered in some dip that likely continued down. So the dip is continued down and then it recovered back. Support line is just, I don't know how it was calculated, it's inaccurate. And then if we see what the other indicators we had, which we were not using, is Fibonacci, which is basically similar to support, right? So it doesn't have a huge difference. I still don't understand these numbers, why we have 3.3 here, 2.6, while this one is 100. So maybe it gets transformed to the hundreds. So it is like 206. No, it's not. It couldn't be 206. These numbers doesn't make sense to me, because we have this support, open rate, close rate. So we profited here, right? We profited. But again, it was running for 10 hours. It doesn't make any sense because it profited here. It could have exited, profited here. It doesn't make any sense for me. Maybe the trailing stop has been, no, a trailing stop would exit. So it doesn't make any sense to me. Neither of this support line, nor this exit, nor these numbers. I don't understand anything. It's just weird. And this is completely insane. So we have support, which is like 12. And then we have open rate 25. Something is wrong here. I think it's not about the trade itself. It's about the notebook. So I think something is wrong with this notebook. It visualizes it wrong. So we have EMAs and everything. This stuff doesn't make any sense. So let me dig into my notebook code and figure out why we have these weird support numbers, because even in this case, this support number doesn't make any sense. While it visualized, okay, so I can tell this is the bad one. So visualization is okay. The support line itself doesn't make any sense, and these numbers doesn't make any sense. So let me dig into the code and figure out what does it mean, these values, because I assume this value is something relative or incomplete than exact trade value. So let me find out and figure it out. So there were some inconsistencies in my trading code versus notebook code. I have fixed them and now it makes more sense. So we can see the support is 212 here, which is intersects with as we can see, so it makes sense. What doesn't make sense to me is this long exit. It's totally wrong. I don't understand it. Here we can see the support line, which is, well, this line kind of better. Now at least I understand that it found a couple of candlesticks and it just created support line based on them and it intersects. The entry though, it's like, so the entry, let's say 25. Well, the entry is okay. Yes, still, it should have been exited here or here. It just done stop loss. I still don't understand it. This support, well, I see, it just analyzes it by a couple of candlesticks, which doesn't make sense to me, because if we consider this chart, we can clearly see that support line is basically, I see it here, for instance. Here is support line, one candlestick, another. It doesn't make sense to me, this support line. And also, this entry where all three EMAs sloping up, I would enter here aggressively, so I would enter, it's also sloping up. This one is more interesting. This one is more interesting because we can see that EMA 20 is sloping down. This is the entry for pullback. For the case of all three sloping up, I would aggressively enter into the trailing stop. And with trailing stop, I would exit here and make a profit. So we'll need another condition like this. This is again the same case. Trailing stop, we would exit here, make some profit. I would better do it like this, and we would have lots of opportunity here. We can use this swing to profit. This one, they're insane. It's insane opportunity to profit, and this strategy simple skips it. So what I would say that currently this strategy, even these visualizations are not perfect. I think it's too early to dive deeper into the candlestick analysis because we need to fix the fundamentals. So what we can see that support lines are inaccurate, so we will need to recalculate them. And also we'll need another condition: when all three EMAs sloping upwards, we should enter aggressively without support lines, without pullbacks. Otherwise, if EMA 20 is sloping down, it means that if this is the pullback opportunity, so we need to make a deeper analysis, support like candlestick, and then enter. So we will review this strategy and update it to match these criteria, because right now, even if the strategy is super profitable, 60% yearly in average throughout last 5 years, it's pretty stable return. We're still being the stock market, but it's very risky and very unpredictable. I still, from what I see in these charts, I can say that this support doesn't make sense to me. For instance, here, it's a perfect opportunity for trailing stop. All three EMAs sloping upward. Just do it and you'll get huge profit. So we'll need to rely on EMAs first, maybe keep it simple. But also this support here makes sense. But again, if you consider this support during the entry, well, it's not ideal entry. I don't like it. So we don't have any volume analysis. We don't have anything else. So what I'm planning to do, I'm planning to improve the strategy to rely more on EMAs when it's sloping upwards, because we're missing lots of opportunity there. And then where there are intersections, one sloping downwards, we can consider using this more complicated approach running on pullbacks and then see how this strategy is performing. So let's do it right now. Okie dokie. So I created this strategy. I call it long trailing strategy, which is really straightforward. And what it does, it simply looks for three EMAs, 200, 20, and 50. Make sure that they are all sloping upwards during the longer period. Make sure that they are they are above, the price is above the EMAs, and makes an entry. So I started testing the strategy. Yes, and I found that it is only profitable when we create ridiculously high stop loss and trailing loss. So basically I put 90% of stop loss and trailing loss, or I fixed it back. So it was something like these and these. So I installed ridiculously high stop loss, which is, it's not safe because it can burn your budget really quickly if your strategy dig into unpredictable period. And I'm backtesting it for 246 days. Yes, we have a profit of 11%, which is not bad for 200 days. We have very little entries, just 7 entries, very little, because our conditions, they are really tight, right? We're waiting that EMA 200 is sloping upward for the last 50 candles. For the 20s for the last 5, and for the 50s for the last 25. So we're looking for a really strong bearish, and it has the 63% of fee ratio, which is good, and we made some profit, and we can try and test it during the longer period of time. So this one is for less than 1 year, and let's test it for 5 years. So I'll do September 2020 till September 2025. Let's see. All right, so it took a couple of minutes for this strategy to run. So run it for the 5 years, and we got really result. So we made so far 86 trades, not a lot, and the winning ratio is almost 90%, which is super good. As far as we neglected the stop loss, so we allowed the price to drop like almost eventually we achieved and we achieved good profit. I mean, for 5 years. So if 70% per year, which is really good. And I love the winning ratio of this strategy, because only few of them has lost. And let's observe basically which one has lost. I think, yeah, there are a couple of trading pairs that might inflate it so bad that they just disappeared entirely. So yes, we can see Dodge has lots of trades because it's really volatile. It traded good profit. Who traded the worst profit? I think we can actually check it here. The worst was Link. The best was Dodgy. So in that, what we can see that I think Link is inflated a lot. That's why we have so many losses. Well, actually, no, you can see that we had 8 trades with Link, 1 was loose and 7, and we still were profitable, so we didn't lose any money. So I mean, it's really simple and really good. And yes, there is a drawback because our stop loss is insanely high. So potentially we can lose a lot here. But I can say is that this is like purely strategy. So it generated even better result than our previous pull strategy. Remember, this is more complicated strategy. So I was calculating the support Fibonacci to just enter the pullbacks, and it performed bad. Well, it performed good. It generated as 60% on average for the last 5 years. But the ratio and lose ratio was really high, so we are losing a lot on this strategy. I think the strategy is also good, the pullbacks, but we need to tune it. We need to find out why trades are not working. For instance, here in entry, the first trade, an entry is pretty good because it enters when it starts sloping down. So basically we are expecting for pullback. Maybe it's not yet a pullback, we need to wait for a bit, so we better and just wait, and then it just go up, it will exit here, and that's it. But it started doing all of this, waiting for a lot of time, missing a whole bunch of another opportunities to enter, and exiting here, generating even lower profit. That sounds unreasonable for me. Then this support line, the red line, doesn't make sense for me. It's not a support line, just some kind of a random line. So we don't have volume, unfortunately, here to understand the volume. Yes, this one is a bit of a late enter, so the pullback has already started, so we should have entered here. And again, even with the late enter, there was still opportunity to exit here, or he just waited until it completely inflated and make a loss. I don't understand why. You consider this chart again. There are a whole bunch of opportunities to enter here. So for instance, we have this pullback. Actually, we have this kind of like a hammer candlestick. It's like a good indicator for entering, like, right? You here, exit here. This kind of, I know why it is missing that much, why it's not finding those pullbacks. So we need to tune our algorithm to better understand it, and it requires more work. But still, it, even in the current state, it creates decent return. And this strategy also does make sense for me. So support line, I mean, the fact that it intersects with these two kind of fine, but it doesn't make sense for me because I would expect to support line to be somewhere here. You can clearly see it's 1, 2, 3 points. It's support line. Again, it entered here, but well, it may have been expected for the pullback, but it's at the beginning of pullback, which doesn't make any sense. You should wait until it goes down, right? So entered here and exit here. Why the heck you haven't exited here? You'll generate much more profit. It just was waiting for ages. That's the question to answer fast with this strategy. It's much more complicated, but we'll get back to it. At the moment, I would like to give kudos to this strategy because this one is super simple and it works really well, especially in bearish markets. But I mean, to it again, for the last 5 years, we have bullish markets. We have the first ATH of Bitcoin was 70K. Then it dropped down to 5K. Then it dropped high again for 120 or 130, whatever. So it was like completely bullish and bearish period of just insane amount of time. And we generated good profit. I mean, 70% per annum. It's just very good considering the volatility of the market. And yeah, that on the stock market you probably get on average 7%, so it's really good. What we can try to do here more is we can try to claim short the timeline. So in my config spot, there should be a timeline. Oh, there is no timeline here, so I'll go and set them on the strategy level. Let's set up timeline for 1 minute, just out of curiosity. Time frame, sorry, not timeline. for 1 minute and run the same backtest. I'm curious, how strategy will perform in 1 minute intervals, because 1 minute is more unpredictable, more volatile, but it's higher probability to generate more trades there and thus benefit from more profit. Or on the other side, it introduces more risk and you can make more losses. So let's make this a long 5-year test for 1 minute time frame and see what will happen. Oh, okay, here you go. So we have pretty much the same. Yeah, I think it was on the 1 minute time frame, no? Before as well, because we have exactly the same result. Yeah, I think it's deep. So if we go 5 minutes, let's see what happened 5 minute time frame. Oh, sorry, that was my bad. It tested it twice on 5 minute time frame because I don't have 1 minute data. I need to download 1 minute data to make the back test. Yeah, I'll do it right now. No, yeah, another out of my I was setting the wrong strategy. Yeah, okay, have it 5 minute time frame, have good return. So I think if we can leave this strategy as it is really well. I would go back to in this strategy and find out why the support lines are not good, and how we can better utilize pullback analysis, pullback entry. So I see also opportunity here. For instance, this pullback, boom, profit, this opportunity, like in one trade, but you can make here like 1, 3, 4, 5, 6, 7, 8, 9, 10. I mean, at 10 profitable trades on this time frame. Yes, I mean, I'm smart right now because I'm analyzing the old data, and when you have a chart like this, for instance, you don't know what will happen in the future and you don't know right time to entry or not. That's why you're smart when you're backtesting. But yeah, I want to make this strategy smart enough to understand, to utilize. Well, this one is pretty good because it made a good profit here. But what I wanted to do actually is probably to utilize all these dips, for instance, enter here, exit here. Well, it's not easy because you need to predict everything very good, and it's high probability to exit. So maybe I won't touch this strategy, this chart, because it's good. But again, this one is not the case for the long pullback strategy, because this spike will be handled by our long trailing strategy. I will profit here. So I don't have any about why this spike was not captured. But this entry doesn't make sense for me because no pullback. So what I would do, I will play around with support lines and find out how to build better support line, more meaningful one. And also I will include the volume analysis as well as the candlestick analysis to better predict good pullback entry opportunities. For instance, this one, the candlestick hammer figure, it's a really good indicator of pullback entry. So this one is a good indicator for entering here and exiting here. While the one we currently have, it's like a random one. So this kind of hammer, it's an indicator of downside dip. So it was like not a good entry here. So yeah, let's dive into the code and fix the support lines, then do the test with support lines, the golden candlestick. Bam, idea. So I have asked AI to help me create this horizontal support chart, this horizontal support method, which is basically takes ATR and doing something similar, but it mostly bigger dips of the chart. So with this, it's supposed to create bigger dip, and we will see. Because right now I have run the strategy for a couple months of backtest and found 12% of profit, which is pretty good. The winning ratio is still 41.5, which is not that good, but still we're getting 12% of profit. That's good. So let's have another run for more 5 years. Let's do it. So after a couple of minutes of execution, we got this result. So basically 335% of profit with 45% winning ratio, which is really good. So we have 5 years, it's 67% of annual return. So it's still it performs slightly better than the previous one, so I would say this strategy is slightly better. Still, we have the long trailing strategy performs even better than this one, and it's much simpler, it's just 60 lines of code. That's pretty much it. So I think we can just dig into it and see how well these support lines are generated, because I have a huge doubt that it generates them correctly, and I don't know how to basically, well, maybe it's possible, but it requires lots of time to dig in and figure out how to create this algorithm to generate the support lines more correctly. I'm relying mostly on AI with a couple of manual modifications, but yes, it's a long ongoing task. I don't like to spend so much time on it because I'm not sure if we'll get lots of value out of it. So I'll go ahead and see the data. So we have, I think, only trades. So I use this command basically to export trades into the file name for the smaller time range, because exporting a large time range will take lots of time. So it's still exporting. Let's see. So it has been exported. We got the same result as the last time. Let's check. Here is our archive with to be called trades. I forgot to name it trades. Anyways, I can rename. Yep. Now I'm exporting signals. So same thing, just export type signals and add the signal suffix to the export file. It should have been exported. Let me check. Yes, we have signals as well. That's good. I have unarchived them, and let me find out the files we need. So we basically have new support lines, pullback signals, great, and trades. Good. So now I will go to my notebook, and here I need to modify the path of the file. So the directory name of signal file, and then we should find the signals pkl file here. I think it's exited signals. Here you go. Yes. Let's do the same for the trade. Could be just plain JSON file. This one, I suppose. Yep. Cool. The only difference that when you long pullback code, no longer uses support plus support. Instead, it uses support level terms. So we need to make sure that every mentioning of last support here is actually support level. Yes, just make sure I have this one commented out. I think we're good. We're good to run the strategy. So I will make this window larger and let's give it a run. So the first run is weird because we have support line somewhere. This line, no, it's exit one. It's not correct. So the support is not a number. Support level. Confirmed support. They're looking for confirmed support. I see. We use support level. Then let's search for confirmed support. I think we should maybe use last support. I think the problem that I just lost in terminology here, because I was rushing to do everything. Anyways, let's give it a try. No, I don't think it helped. It's still weird. Alright, something weird is going on here. And even this strategy works. I don't want to invest more time into it because it's hard to debug. It's a simple trailing strategy creates much better return than this complicated one, and well, more risky. So I'll better stop here and I'll better focus on our last strategy that we have. It was long trailing. It's a simple strategy that's just doing trailing that generated us, I think, around 80% average year return for the last 5 years. It works pretty good. So what I did, I created this similar strategy for shorts. So this strategy will be running on futures. So basically it will be the short strategy, and then we'll try to run the backtest spread as well on futures. Now well, the problem was that this long trailing strategy was relying on really loose stop loss, so it eventually was profiting. We can actually make it the same here, just don't change anything and leave everything as it is. Let's give it a try for this strategy, because in conjunction it can bring us a good return. If our strategy on shorts would be as good as long, we can run them both simultaneously, and short strategy will benefit when market is bearish, and then long will benefit the market is bullish. So Let's give it a try. I'll open out this terminal, it's quite more convenient, and I will run it for short time frame. So first of all, I need to check my futures configuration. We have just 3 trading pairs, and I think my data for the futures has only 3 trading pairs for 8 hours and 5 minutes. So I need to download the data for futures. So let me slightly modify this command. First of all, I want to specify the proper trading pairs. So they are usually specified in this way. For the, I don't know why, but you need to just specify double USDTs, and then I want to specify, I want to change the interval. I think it's only 5 minutes, and days I'll do 1 year, and also I need to explicitly tell that these are the futures. I think this argument doesn't work. Let me see DL trades. Yes, should be trading more without DL. I think it works. Let me save this command for future. Good, we don't only for USDT. Let's then head all trading pairs. So let me download the data for more trading pairs. Cool. Data has been downloaded, so it's good. We have lots of data now. I'll run the backtest for the 1 year. Let's go. Nothing. I see I have fucked up with the shifting here, so the configuration was improper. Let's run this test now. So we can see here that we've done 20 trades, not a lot. It means market was more bullish than bearish. We have minus 20% losses with like 45% win. So basically, we are not making big money. We actually losing money here, right? Yes. But I think the short strategy needs to be adjusted in somehow to flex this. We can play around like with these parameters. So let's do, instead of 50%, let's do like 10, 9 here. Maybe this one will help. Let's run another test. Okay, even so, well, you can see that the winning ratio is like 60, but still lots of losses. So let's narrow down our stop loss to just 10%, and we'll see if it will help, because we're probably losing big sums on the bullish trends. Okay, yeah, better. Now we have very big loss ratio, and so still total profit is minus 10. What I can do basically, I can try to do the stop loss of 20% and see if it will be a sweet spot of a balance to make it profitable. But still, right now we're fighting to it's at least profitable, and we are really far from making significant profits. So I don't think shorting with this approach will work. So you might need to consider a different approach for short strategy. But let's see. No, 15% even worth. So if you tighten it up to 1%, 10%, that might be good. Then we can consider doing something here. For instance, these comments, because they are true and they are just destructive. So let's make trailing offset positive on, yeah, let's make, well, you can go granular. Okay, let's make 5% and then 4%. Yeah, let's try these. No, even worse. Let's make more granular. Let's make stop loss of like 3%. Make trailing positive offset of 1%, and this make 0.9%. So we're basically setting up stop loss when the strategy reaches 1%, and then yeah, we will feel our profit here, and we'll see if it could work in the granular context. We got consent, lots of trades, but I mean 3% stop loss too much. Let's make it 1%. Yeah, so yeah, let's do this. Okay, now it's even profitable. It's super unprofitable. Yeah, I think wow, let me do another thing. So we got the stop loss, then let's have 3% of trailing and then 3% of fixed stop loss, and see if we can find because the problem was that we were making lots of wins. So this actually, the trend was predicted good, but the balance between stop loss and win was low, so we were losing money. And I assume we can find a sweet spot. I mean, it's still like it. So 3%, we are not making a lot of wins because it's very rare that it goes that far. Let's return it back to what we have is 1%, and let's have stop loss really small, like 0.5. That way we dramatically decrease our losses and aiming that our profit will compensate for losses. And we'll see how much we'll generate here. No, it's crazy. So yeah, I would say short trailing strategy will not work the same way as long trailing. So long trailing is good. I would use it. I would use also long pullback. These are good strategies I will use for longs, but for short, I have not found anything yet that could be profitable. I think for the short, we might consider some alternative indicators to find out some better entry options. But it leads me to the point that we're spending a lot of time to basically creating these horizontal support complicated algorithm that work shady, and we spend a lot of time to debug them, and it doesn't really work. Well, the simple strategy is more profitable than this complicated one. So I think that we can continue digging into debugging and find something, but we can end up optimizing it in a year and still reach the point. So I think what can we do next actually is we can involve machine learning model. So in my next video, I will explore, set up and train machine learning model to predict the price movement and then make Freqtrade work machine learning model. So instead we statically creating this complicated algorithm, we just train the model to detect the price raises, price drops, and then we can, in that way, we can set up our strategy in a way that will make the trades based from machine learning artificial intelligence, right? Instead of having static algorithm. So thank you for watching. We gained a good result in this video. We've created a strategy that generates 80% of yearly return in average for the last 5 years. I'll give it a shot. I'll execute this strategy on the spot market, on the sandbox market for a month. And then if I find it works well, I'll probably go for the live market with that. And in the meanwhile, we will start in the next video to exploring the machine learning and how we can train machine learning model basically to predict prices, so it can do is with better accuracy, so we can achieve much better returns and much better result. So thank you for watching, stay tuned, and I will see you next video. Bye.